No, I told us that anything you want to produce, you have to move the raw material from your store to production for easy counting and accessibility. So now, for us to move our items from raw material store to production, we need to create transfer voucher. Transfer voucher. We didn't create it in our last lesson. So now let's create transfer voucher. Anything you want to create, you do it from master. Now you come to create, you come to voucher type, voucher type, voucher type. You click voucher type, you type transfer, transfer, okay, let me just call it stock transfer, stock transfer. So now from stock transfer is a daughter to stock journal. Select type of voucher. Stock transfer is like stock journal, so you select stock journal. And last week we have discussed all the other options which you can just pick. So you can come here and say transfer. That's the name of the class, and use class for interlocation transfer. Yes. Use for interlocation transfer. Yes. So now we accept like this. So you can press escape to go back. So you come to voucher. Voucher under this journal. You click journal, you will see stock journal. You click, we put it under stock journal. So you click stock journal, you can see stock transfer. This is stock transfer, but I will explain these three now. We explained last week, but let me just go over them again. Now, stock journal, you can see is a T format type, a T format type. This is your source or consumption. This is destination and production. The source is where the goods is, where you are moving it to is destination. Most companies, they use this T format, but I look at it as a stressful format because by the time you list the same item here, you come to this side, you list the same item, it will consume a lot of time. But in a situation whereby the item in here is different from this side, let's say here you have it as cartons, but once it gets here, it becomes pieces. Then you can use this T format because they are not the same measurement. But if they are the same measurement, that is, if you put width in grammage here, in gram here, it will also come in as width in gram. I advise that this T format, it will take much time. So let's use the other method, which is the one we just did now, stock transfer. Then transfer. You see, this one is a straight line. Destination, all your all the stock you are moving to other side, they will move at one, instead of the old format that you have a replica of this thing at the right side, the same thing at the left side. So we are using this stock transfer for our stock movement. Now I want to move our stock from raw material to production. Our destination will now be production store. That is our destination. Now, which stock are we moving? We are moving flour. We move flour. Now, in the last lesson, we have some flour in main location. The one we just did now, the purchase, we have them at raw material store. So now we are picking from, let's pick from display. Let's exhaust all what we have in this main location. Let's move 2005. So which other item are we moving? We are moving PVC liner. We want to produce spaghetti because this company is a spaghetti company. So let's move PVC line. Let's move 60. Which other item are we moving? Slim pack carton. Let's move 12,005. So spicy. Spicy. Let's move 15. Which other item? Vegetable oil. Let's move 20,000. Hope I'm not too fast. And wheat, let's move 9,000 here, and we come to the next location too. Let's move 2,000. So these are the items you want to move to production. Please mute your audio, please. I don't want to. Okay. So now all the goods we are moving to production, everything is 18.50. So you can just put narration that being stock transferred to production via slip number. If you have manual slip number, you can just put the slip number there. So please, someone audio is on. So now accept. So now we have transferred that goods to production. You can also do some other transfers so that you get used to the voucher. So now we have transferred to production. So let's go and produce. This is very important area, and I want you guys to pay attention. Now, under stock journal, you see production journal. This place is very, very key. If you have any question, you just call me back. So now, production journal. This is your production journal. You can see the interface is different from the stock transfer voucher and the regular stock journal. Now, name of product. The name of products we are producing, that is the finished goods. We have narrowed our scope. We are producing 180 grams of slim spaghetti. You know, physically, the moment the goods are produced at the production floor, the production manager will submit whatever they have produced to the finished goods store with the slip, like, okay, 15,000 cartons is the batch we have produced. So it's now left for the production, the guy at the production, to post the entry. Let me tell you that all these entries are not being passed by one person. They are not being passed by one person. So do not be scared that will I be the one that will be doing all this work. No. In a medium or big companies, there are different people that pass all this entry. But let's say it's a small place where you are maybe employee of 1 or 2. So it is possible that only one person will handle all. So now let's go. 180 grams of slim spaghetti FG. So the moment you put this, because last week we've developed the product, the formulation. For us to produce 180 grams of slim spaghetti, we need these items for production. And last lesson, we did formulation of 2 batches. I mean, of 2 types. That, you know, some companies, they have like 2 formulas for one product. Probably during harmattan, they may reduce something, and when there is no harmattan, they may add something or some other management reasons. So now let's go with this formulation, the one we did 17/07/2021. That's the name of our bomb. Okay, we didn't complete this one. You can see this one is coming with 1 item. So now let's select this one. This one is coming with full items. So location, that is where we are sending those goods to. We are sending them to FG store. Now, what are we producing? So after the production has done their thing, you know what is going on here is we are using system to monitor the activity going on at the production floor. We are using system to monitor the activity going on at the production floor, because that is where we can know the amount of waste and other things. So now let's go. Quantity, let's say we have produced 2005 cartons. The moment you put 2005 cartons here, the system automatically will populate equivalent raw material and packaging material used to get these cartons. That's just the system. And you are not, don't need to do anything here, because the rate, the system is taking weighted average. So you don't need to come here and change rates, change this, change that. Once you put 2005 cartons here or any other produce quantity, the system will populate equivalent quantity and amount. So now, I believe you understand this side. This side, we call it co-product, byproduct, and scrap. So let's say in a situation where, okay, you can see warning, a stock 14,000 pieces. Which item is that? I guess is the nylon. Is the nylon. So let's reduce, because we are in test mode. You understand? That's why you know, if it's a proper, we've done a proper documentation, is a current what is happening on the field, they can't produce more than what we supply to them, unless if the person that passed the supply transfer notes to production made mistake. Probably this would have been 100,000. You understand? But if that is not the case, for the purpose of, let's just change this to like 1,000 cartons. 1,000. Okay. Okay. So now here I said we have co-products, byproduct, and scrap. As it is now, you can see the total cost of our production for 1,000 cartons of spaghetti, slim spaghetti, is 568,968.09, meaning the effective primary item for production is 568 naira, meaning from the production floor, one carton is 568. This will give the management insight of like how much should be our margin. But some companies already, they have factored some margin in their cost of production. You can see here we have cost of components. So let's say it's a company where they had their electricity as part of cost of production. I want you to note 568. The moment we come to cost of components and we say, okay, let's say let's create electricity, for example, electricity. Okay, let me call it electricity. Let me call it power. Let me just call it power. Let me just call it power. Let's put everything here for now. Let's say power. For this production, power is 0.5%. You can see that, let's say, as per the management decision, the program is that for every 1,000 cartons of slim spaghetti, the production plant will consume 0.5. So that 0.5 is factored with the production. You can see the cost of power of producing 1,000 cartons is 2,844. So now let's say they have they had labor or manpower. Let's call it manpower. We don't have manpower, so let's create manpower ledger. And you know, this power is part of your cost of production. You understand? It's part of your cost of production. So let's say let me create manpower. So our manpower will be under direct. The other one I did should have been, the power should have been under direct expense, because it's part of your cost of goods sold. So now let's say the cost of manpower of producing this thing is like, say, 1.5%, meaning for every 1,000 cartons you produce, you pay 8,534 naira. So you can see the cost has increased. So likewise, if the management feel that they want to add another cost, the moment you put some other cost here, this effective rate will be going up. So at the end of the day, management can now put their margin that, okay, this is the amount we want to sell it, having factor our power, our manpower. But some companies, they don't like putting that, because to some company is cumbersome, and it may alter a lot of things in their system. Because some companies, you know, the way Nigeria and other countries are, they can use the same employee for this plan, for another plan, for that plan. So at the end of the day, to factor the cost to a certain plan will be difficult. But for the purpose of education, I need to just let you know. So any question before I accept this production journal? So you can also do more other production journal, but for the purpose of education and time, we have been able to do just one sample. So any question? Do you have any question as per this production journal before I accept? So you can just say being 1,000 cartons of spag produced on so date, on, let's say, on 30th 6 2021 via production slip number 0526, like that. So thereafter you accept. So the moment you accept, you can just press escape. You come to your display. Even from your stock summary, you will see the finished goods. This is what we have produced. Our opening balance was 1.2 1,200 cartons. This is what we produce. You can see it in our inward. This is 180 gram of slim spaghetti. So we have produced goods. Now, since we have available goods, it is now time for us to make sales. It is now time for us to make sales, and I will hand over you to my colleague, Juliet Adigbe, Mrs. So she will take you guys from here. Hello, Juliet. So from this voucher, let's make use of sales voucher, Abuja, for example. This is location, the location where the goods will be picked from. We are picking this thing from FG store. Now, last week we did some customers, Alala Deoreofe and so. So let's pick Alala Deoreofe Venture. This is the address of the guy. The guy is in Abia. So now, sales ledger, similar thing we did in purchase. So we create sales accounts, sales. Okay. So now what we are selling is 180 grams spaghetti. We are selling, this guy is buying 50 cartons. You know, our production was around 600 or so. So let's say management want to sell this thing at 750. And another item, we have 240 slim. We have, let's say, 14 cartons at 1,002 and many more. Similar thing we did in purchase. You can add VAT. Similar thing, even if for any other company, you can add VAT on, this is VAT on purchase. So you can create VAT on sales. Now, VAT on sales. So duty, under duty and taxes is 7.5 also. So, additional duty on total sales. So the system will calculate 7.5 of this on total sales. So if you want to charge the customer, we have done freight. Okay. Charge on delivery, charges on delivery. Now, your charges on delivery, the one we did was under expense because it's for suppliers. But if you still want to use the same thing, no problem. And if your company or the company or you guys feel that some company, they take their charge on delivery as income, because like let me just say like Jumia, for example, they take part of their delivery charges as income because the dispatch may not get up to that. You understand? So they take a portion as income. But notwithstanding, let's just use this as charges on delivery. Now, the charge on delivery, if you are charging them by percentage, like 5%, you understand? You can say 5%, but if it's just amounts that, okay, for us to get 4,300, worth of goods to your doorstep, you need to pay 1,005. That is that, and any other charges. The moment you do that, now the person paying cash or is paying bank or through this method and all that. Okay. So cash tender 59,872.50, fine. If there is balance, fine. If there is no balance, fine. So we put narration being 180 gram of slim, blah 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 blah, and so on and so like that. So accept. So with this, we have done sales. So you can also do more sales voucher. So Adigbe, we have continue. Hello?
Hello.
Yeah, I can see your screen now.
You can see my screen now.
Yes.
Okay. I don't know whether you're seeing this. Hello.
Yeah, you are there.
Okay. So, good morning, everybody. Sorry for the challenges. You know the way our network and everything. So we are going to look at the aspect of payment since you have treated sales. So let's assume we want to make payment for the items we've received. So we want to make use of our bank. First of all, we'll just go through the bank payments, that's payments, this particular one. Then from there, which of the bank accounts are we using? We have a First Bank, we have UBA, but for the purpose of this, we shall be using First Bank. So from the First Bank, let's assume we are paying Danga Industries Limited for the items they supplied us. So we click on Danga. Probably we are not going to pay them everything. Let's assume we are paying 900. 900. At least we have a 15 days period. So we click, that's the sales they supplied us, that's the purchase we got from them. So we have 900, we hit it against it. So we have a balance that will still show. So at this point, payment is usually more straightforward. If it's a check, we state the check range, the instruction number, that's the check number. Let's assume it's a check, we say 200, that's the check number, and the date on the check. Then this narration can be being part payment or supply received from Danga. You can quote the invoice number, you can quote the GRN, depending on which of them you get. So at this point, you just press on your enter.
Hello, Adigbe, can you let your phone be far from your laptop? It's like there is feedback.
Don't worry. Yeah, I can see that myself. I'm doing that. Okay, so you enter, then accept yes or no, enter again, meaning yes. So the payment for that is gone, for that particular one. That's when you are using payment through bank. Most cases you can have payment through cash too, but in this case we might not be using cash. I'm just wanting to show you. It's not as if we have any amount in our cash book. So if you do same method, no difference in that. That's for payments when you are paying your suppliers and all that. I'm not sure Mr. Joseph talked about receipts. So let me just run through receipts. Receipt is basically for those that want, like the person that bought sales from us, they bought spaghetti. Before the spaghetti, it depends on how we are transacting with them. If they have credit limits, you can give them the items based on the fact that they are going to pay. But if it's a cash customer, the payment must have hit our bank account.